Welcome back, Alpha Hunters. So the market just closed for this Friday, the week of June the 3rd, and we didn't really see much kind of go on this week, especially compared to last week. And last week we saw great buying come in. This week it was kind of just choppy sideways. Not much really went on. So let's go ahead and delve into what kind of went on this week. And then we'll look at some longer term picture stuff, kind of go back to that, re-examine what the longer term picture looks like, and then work our way narrower into where we think we can get to. Okay, so obviously this week we didn't really do much. Started the week a little bit lower than where we ended last week for Monday. It was just kind of choppy. It was just, up, down, up, then back down today. So it wasn't really much going on. If we look at the 15-minute chart, we could just see it just kind of just went sideways. Now, this trend line we got going up here, it's not really like an official trend line of any major trend. It's just one I have out there for a price target of what I have going on out here. So it's not really a major trend line. It's just one that I'm kind of just saying from the bottom that we put in 2 weeks ago to where I think we kind of get to on the market here over the next 2 weeks. Okay. So what is very interesting is kind of how the way we ended this week. So if we do go to a weekly picture and let's look at this. So obviously we had last week super strong buying coming in, and then not much went on this week, right? We just had some sideways doji action going on the weekly. Now obviously it looks like we just chopped in between on the weekly, the 100 and the 10 EMA. So which one kind of wins out in the end? Probably find out this next week. I would imagine we'd probably do pop bullish, and I'm going to show you why back in 2000 we have a similar pattern that the market played out back then. Okay, so let's go look back in 2000 to see what that pattern was, and it's this one right here. We had multiple weeks down in a row. It was actually 6 weeks down in a row. Wow. So we just obviously put in 7, and then we had a bottom here on really the 7th week down from this top that we had back over here. And then we had a green candle, a red doji candle that we just kind of put in, and then we had another green candle. Okay, and the interesting thing about this green candle to end out the action here over this last 2 weeks of this little bullish retest here is it comes into contact with the 20 weekly moving average. Okay, what we can kind of take away from that, from today's market and stuff like that, is what we're going to be looking at here in just a little bit. But notice where the 20 weekly moving average is and how important that's going to be kind of over the next week or two. Okay, I really think next week might be the week if you want to start rolling out of the market. It kind of makes a lot of sense to me. So are we going to just roll over from here at this point and start selling down again? I don't think so, and I'm going to show you why. Okay, so let's get a longer term perspective. Okay, you guys have seen me show this off before on the channel, and I showed it off I think about 3 weeks ago. This is the exponential price chart of the S&P 500. Okay, going all the way back to the late 1920s. Okay, so this trend line that you see going up through here, this is the long-term exponential trend line, and then the green line is obviously just the price of the S&P 500. So what you can see is anytime we get above it, we kind of pull back to it. Anytime we get below it, we'll eventually make our way back to it, and so on and so on. Now what's interesting is where we are currently and how far away we have been as of the recent high that we put in at the end of December, beginning of January. And so I do think we are on this bearish trend to pull back to this support line, kind of like how we did back in the 2000s. Now this market that we are currently in very much so matches up very well with the tech bubble that we had in 2000. So the bear market in 2000 to 2003 is one that I'm kind of been adopting its rhythm and how it went down in some bearish moves and some bullish retest moves. So that's one I'm really looking at. I am looking a little bit at the 07 to 09 bearish market, but really it's the 2000 to 2003. That's the one I'm mostly looking at. But obviously that one was a little bit more extended to the upside. So I don't think this bearish market will last that long. Okay, so if we do look now at this chart, this is pretty much the same kind of information. It's just laid out a little bit differently. Okay, this blue line it lets us know what kind of percentage we are away from the long-term exponential trend line, right? So the orange line is the price of the S&P 500. Don't worry about that. This blue line is the difference in percent between the price and the exponential trend line, okay? So I want you to notice where we are and where the tech bubble was. That's why I'm saying we're not going to pull back as much as a lot of people think. Like, I've seen some people thinking we're going to get really crushed over this bear market. I don't think we're going to get crushed that bad, but we are due for a pullback, right? Because we haven't really been this elevated other than 3 or 4 times in history, right? We had the big overvaluation in the roaring 20s that led to the Great Depression. And then we had a nice bounce back there in the 30s from that trend line. And then the last time we were really this far over it was the tech bubble. So the tech bubble, this is how far we were. We got to actually 100% over that long-term exponential trend line. This time we actually got a little bit over 50% from it, about 60% from that trend line. So yeah, we're just due for a little bit of a pullback. Not a big deal. Just understand that that is the game, okay? We do go up and we do have pullbacks. So just understanding that this is something that the market just does naturally over time is something that will help you in positioning for certain moves, okay? So I'll use this a little bit for a guideline. You guys have seen me show this off before. This will be in the Discord. I have kind of updated some things, just some naming of these columns, and then also some of the way these formulas are calculated, just to make them a little bit more uniform to what we are used to using. But this data will be in the analysis part of the Discord. That way you can take a look at it. But let's get back to the S&P 500 or the SPY, and let's figure out where we are going. So obviously we just did put in a red week. So I would expect to see another strong bullish week next week. Now, as we kind of get into the strong bullish week next week, and if you also notice the volume that we put in, now I get it, we had 4 days this week. We didn't have a full 5-day week. I don't really know on a per day basis. It looks like we were pretty even on a per day basis. So that's kind of hard to factor in, but I would expect next week, especially early next week, that we start pushing higher up into this green box zone. You guys know I've had this green box here for a while. The real number is going to be here at 430, 4,300 for you futures guys. That is going to be a very key level. I probably will be taking my position off at around that 4,300, 430 level on the SPY, just because the risk reward at that point in time is just not going to be as good. The other thing is I'm going to start to be a little bit patient because I do expect the market to get a little choppy in here as we get into this green box zone. So as we kind of get into the green box zone, I will be looking to probably just unwind my bullish trades and start to just wait, just patiently wait to see what the market does. Does it break above this 4,300? If it does break above this 4,300 level, I would imagine it does break then above this 432 level, which then we will be within 10% of the all-time high. Be careful of this narrative that you will probably hear. And it makes a lot of sense for the market to actually push up and close above the 432 point level next Friday. And the reason why I say that is because that will be Wall Street's way of getting all the media outlets, all of the financial talking heads, everybody saying, hey, we are no longer in a correction. We are within 10% of the all-time high. You will hear it, book it. I promise you, you will hear that everywhere. And then come out Monday, they will probably let the market open higher and they will smoke it down the rest of the day, as that will also be a Fed week, okay? So next week, there's not much news. That's the other thing. There is not much news. The times that we have gotten news recently over the past, month and a half, 2 months, it has been pretty bad. The market has responded to it very poorly. So next week, there's not much news. So that is why I do think we'll probably see some bullish activity just as we go throughout the week. The 4,300 level, I do think we'll probably break that. Watch this 432 level. If we close above it, I would probably be closing all my longs, because if we open the next day, we might open just down and start trading down. But if we do close over that 432 point level on the SPY, be very careful, as you will hear the narrative being talked about through the financial news outlets and stuff like that, that we are no longer in a correction. And then that will be the time, okay? Now, the reason why I say that is if we look at the past 2 bear markets, when we had the second bullish retracement, we got to within 7.5% of the all-time high. And that one was back in the 2000 to 2002 bear market. And in the 07 to 09 bear market, we got to within 8.5% on the second bullish retracement. So that is definitely a number to watch out for. So 432 is within 10% of the all-time high, right? So if we type in 432 here, see 10% is within all-time high. So anything above that, I would be very cautious. So 436, you know, could be a possibility. That'd be like within 9% or so. So just be very careful. Anything over 432, as even though you will hear the narrative change in the media, and that would just be the time to start closing your bullish positions and start looking to pick up your bearish position. So anything over 432 would be within 10%. Just remember that and watch for that narrative next week. So where do we think we could actually get to? Well, 430 is going to be a pretty good spot that I think we'll get to regardless. We might just sell off from there. I don't think so, because I do think we'll get back within that 10%. So I'm actually going to lower this box here a little bit. You guys know I've been saying, you know, 440 for a while. I don't think that happens, so I'm actually going to lower this a little bit. And the reason I'm going to lower this is because I think we'll get to the bottom of this little spot right here. As we break over 432, maybe we get to like 436, 437 area. And I think that might be it. I don't think we get to 440. That will probably be what I look for. And it makes a lot of sense on so many levels just to kind of get into that spot, get above 432, just into the mid 430 area. Just makes so much sense, just on like technical level, psychological level. Everybody would just be freaked out as well. So that'll be my game plan going forward. So I'm going to go ahead and lower this. I'll probably just lower it down to 436, but I'm not going to definitely hold my bullish positions for that. So now if we type in on this box right here, and you'll be able to play around with this on the spreadsheet that's in Discord, we can see some of these numbers change, right? So people talk about like 4,300 or 430 on the SPY. Well, if we do that, see, we don't get back within 10%. We're a little bit below that. And also the bullish retracement in the first two, well, we don't also bullish retrace within 60%, right? It would just be below 60%. So I'm definitely looking for that bullish retrace to be a little bit over 60%. And if a lot of this is small, I'm sorry, I'm trying to keep it all on one screen, but feel free just to go on the Discord and go ahead and grab this file and see what kind of data I'm playing around with. That way you kind of know what, you know, what I'm looking at. And if you have grabbed this file before previously, I have made some updates and changes to it. So I would just go and grab it again. So as you punch numbers in here, you know, we'll get some value changes here. Don't worry about this div -0. It's because we haven't finished that trend. It calculates off of this 0 here. We just need to figure out the number of days. So once the trend ends, then we'll figure that out. But it's going to be pretty strong. And currently, if we do keep on the pace that we are on and we get to like that mid 430 area, this number probably would be around that 90% area, which I don't think would be a bottom. I think it would just be a strong bear market rally. But as far as where we can get to, if you watch some of these numbers over here on the right side, you know, we can definitely get to like maybe 432. If we got to 432, obviously that'd be within 10%. It'd be a 61% retracement. That's why, man, that's a little too loose for me. I do think the market's going to try and push it a little bit higher. So if we close at like, I don't know, maybe 433 or so one day, I would expect the next day we actually do get a little bit higher, maybe like 435, and that might be the end of it. I don't think we'll go much higher than that. Maybe we do make it up to 437, not really sure. Anything over 432, I would definitely be looking to start picking up some bearish positions, okay? I'm gonna be doing that, and we'll look at that probably later again next week. But for now, I think my game plan is just gonna be bullish up until about the 430 area, and then I'll take it off. I'm just going to wait. I'm going to let the market just kind of push up, and anything over the 432 area I think is going to be a solid, I mean solid time to start looking for those bearish type moves. And the reason why I do think this 430 area or the 4300 area on the SPY, the S&P 500, is because if you see back here, everybody back at this point could see that this little double top here, and then we broke over it one day. One day we got above it, and then it just didn't hold, and we just kind of kept selling down from there. So just watch out after we break over this 430 area. We might only be up over that area for like 1 or 2 days. And I do think we'll probably, after we get over that 430 area, it'll probably be a pretty quick move up as you can see, like once we got over that area, I mean, we were over it on the open and just kind of traded down, retested into it, and kind of just bounced higher. So just watch out for that this next week, as I do think the 430 area, we will get above it, and then that'll be the time. And especially if we get over 432, to probably just go and start picking up some bearish positions or start your hedges. You know, and I've been talking about it, you know, develop your program, develop your plan for what you want to do. That is going to be the time. I'm telling you right now, that is going to be the time to pick up your bearish positions, your hedges on your portfolios. If you don't want to close out, I understand that, but just understand a 30% pullback is very realistic. It'll probably be, from what I've been looking at, a little bit more like 25%. So if we do zoom out here, let me go to a 1 month, it'll probably be back down into this zone where I do think we eventually get to. So if we go from, you know, up into this area all the way back down, it's going to be about a 25% retracement or so back down. So if you don't think you can handle a 25%, dude, just buy some puts, buy some hedges on your portfolio. It's not that big of a deal. You know, just understand that the market does do this, and it is currently very extended from that long-term exponential trend line. And that's where this green box currently is, okay? So let's go ahead now and shift over to the Qs, as I kind of think we beat up the S&P 500 a little bit there. So the Qs, so you know what, on the Qs, I'm not really seeing anything to deter me from getting to this box area. I do think we'll probably snap above it, you know, the same kind of area that the SPY has, right? The same kind of top area that is around the 430 area is pretty much the same kind of pattern here, which is around the 330 area then on the Qs. So I'll just be very careful around that area. I think that would be a spot to where people probably look to start unwinding some bullish positions and start maybe looking for bearish positions. And the other thing is we might not actually get that high. Maybe we only have a 50% retracement and we get just below that top action, because tech has been pretty weak, as we saw them also today just trade down 2.5%. So yeah, tech's starting to really just be really lagging on the market and weighing quite a bit. So just be careful with that, but they might be very strong this next week as we do get the last push higher. But don't think that that is a sign of hope to be buying into any push that, you know, higher that tech does, okay? Now, I was talking with a buddy of mine over the past week, and we were kind of just talking about the difference between like price action and indicators, you know, technical indicators and stuff like that. And one of the things that's very important to know, and why I don't talk very much about technical indicators and other economic indicators, is because they really don't matter. The only thing that matters is price action. We trade price action. We do not trade economic indicators. We don't trade jobs reports. We don't trade Fed decisions. You know, those are obviously going to be catalysts. So I'm not saying be blinders only to what's going on in the market. And you actually could be totally blinders to what price action goes on in the marketplace. But just understand that if you don't want to have certain risk on the table for a catalyst event that's coming up, then you want to be exposed to that. So with all that being said, this next Wednesday, I'm going to put out a video kind of just talking about price action versus indicators, and maybe when is good time to use indicators and when is not a good time to use indicators, okay? Now, it's not going to cover all indicators, but just some general principles that you kind of just want to know and understand, okay? So watch out for that. It'll probably be helpful for especially like newer people that are like, there's just so much information out there. Just simplify it and just learn price action and you'll be okay. So have a good weekend. Alrighty, take care, Alpha Hunters.